So today we will be exploring HSAs and FSAs. And hopefully by the end of the video, you're able to walk away with complete confidence uh, in answering the question whether an HSA or FSA makes sense for you specifically. Okay. Now diving straight in, there's really three questions that percolates in my mind whenever I'm deciding whether an HSA or an FSA makes sense for this specific person. Question number one is, do they have it offered, right? It's pretty basic, but not everyone has these accounts offered to them, right? Your FSA is employer sponsored. So if your employer sponsors an FSA, you can contribute to it. If they don't, you cannot. It's pretty simple. It's black and white. There's not really much to it. Now, sidebar for a second on the FSA. It doesn't travel with you employer to employer. Okay, so it really stays put. It's rigid. If you're working at one employer, you move on to the next one. That FSA is not coming along with you. Okay, the HSA is different in that regard. The HSA, it's pretty fluid. It travels with you employer to employer. If you move from one and go to the other, as long as you're in the high deductible health plan, that's the key. Are you in the high deductible health plan? If you are, then you have an HSA offered to you. If you are not, then you do not. Okay. So if you are in the high deductible plan, that HSA can travel with you employer to employer. Now, let's assume for a second you're the person that your employer offers the FSA, you are in the high deductible plan, so you do have the HSA offered, and you're just like, do I contribute to these? If so, which one? The second question to think about is, what will my contributions be used for? Okay. The FSA, it's commonplace for people that have medical right around the corner. Let's say you're the person that every year for the past decade, you've had this prescription expense and it qualifies as a FSA expenditure. And I'll attach down below what qualifies because I get a lot of questions on that, right? Hey, Tyler, I went to CVS, I paid for this. Does that qualify for my HSA or FSA expenditure? I'll attach a list down below. But let's say you're the person where you do have this qualifying expense year over year. You know it's happening next year. Maybe your wife's pregnant and there's a procedure next year, or whatever it is, to some reasonable degree, you know you're going to have this health expense next year and it qualifies. An FSA might be pretty compelling for that person. Okay. And the reason why is the alternative, you might have paid for that health expense out of your bank account in past, which is not bad, right? You just pay for it outright out of your bank account. The one thing to think about, there is no deduction in that specific situation, right? You get no tax deduction for paying for it out of your bank account. If you're the person that says, hey, I'm not going to pay for it out of my bank account, I know this is right around the corner, let me contribute to my FSA and pay for it out of my FSA. Well, then you get a tax deduction, right? Everything you contribute to the FSA, you get to deduct from your taxes that year. Okay, so if there's free money on the table via this tax deduction, you want to try to grab it. So for that specific situation, an FSA might be completely valid. Now, let's say you're the person, you're healthy, right? Hey, Tyler, I'm healthy. I haven't been to the doctor in a decade. I don't even know my doctor's name. I ran 100 miles last weekend. I'm healthy, right? An HSA might still make sense for you. And the reason why is an HSA, you can contribute to it. You get a tax deduction for anything you contribute, and you can carry it forward. Okay, that's different than an FSA. An FSA, if you don't use it, you lose it. So if you don't use it within the year, you lose it. And I'll put an asterisk next to that. Sometimes, depending on your employer, you can carry forward up to $680, but that's not much, right? So it's basically if you don't use it, you lose it. Your HSA is completely different. You can carry it forward indefinitely. Anything you contribute, the balance of your HSA, you can carry that thing forward. Okay, and You couple that with the fact that everything above $1,000 to $2,000, everything above that threshold, you can invest in the HSA. You couple those two facts together, then it's like, okay, well, I can get this money growing in a tax-free spot, invested in a place that historically the past 95 years has averaged 10%. That that could be pretty attractive. And if I have health down the road, I can pull it out tax-free. If I don't, a lot of people don't know this. If you don't have medical and you're 65 or older, the HSA just turns into a 401k and how it's taxed. Okay, so it really is pretty flexible and fluid in nature. So that's something to think about, right? Like, hey, what am I going to use these contributions for? Now, the third question is there free money? Okay, everyone pays attention to the free money in their 401k. Hey, I know if I contribute 6% to my 401k, I'm going to get a 3% match, right? And people love it. And I love it for you. That's awesome. But no one ever pays attention to the free money being offered in their HSA. And it's not like your employer advertises it to the world, right? It's buried somewhere in your benefits booklet. But oftentimes employers do offer a match. Hey, if you contribute $1,000 to your HSA, we're going to match you $500. That's free money, right? Like that's 100% ROI, return on your investment. So if there's free money on the table, you don't want to ignore it. So those are the three things to think about, right? Now, a bonus question that I oftentimes get is, hey, Tyler, I've been contributing to my HSA, right? I'm healthy. I've been contributing. But something I thought about, it's finally come the time where next year I'm going to have this health expense. Should I use my HSA to pay for it? And a lot of you are probably thinking, yeah, duh. Sometimes the answer is no, right? And the reason why is if you have a health expense next year, maybe you have your emergency fund, it's plush, right? Your emergency fund's good, and you have money above and beyond that at the bank. It might make sense for you to pay for that health expense out of your surplus funds at the bank rather than your HSA. And the reason why is why touch the money that's cooking and baking in this tax advantaged location when you have the surplus funds just sitting in cash? So that might be something to explore, right? And you want to pay attention to some of these things, right? Like some people, me for instance, have you ever wondered why the contribution limits to an HSA are so low? Right? You can only contribute per person $4,400 in 2026 to an HSA. That's low. If you compare that to your 401k, you can shove like 5 to 6 times the amount of money into that thing versus this HSA. And the reason why is because the HSA is such a tax advantaged account, right? The IRS limits how much money you can shove into that thing. So you want to pay attention to some of those things. And I'll attach down below, if you're the person that does have the health expenses coming up and you say, hey, I do want to just carry forward my HSA and I'm going to pay for this health expense out of cash, something to make note for you specifically, you can come back for that. Meaning 5, 10, 20 years from now, you can come back for that health expense that you paid for out of cash and deduct it from your HSA when you pull the money out. But obviously you need to keep track of it, right? So I have an Excel sheet down below that allows you to keep track of that stuff a little bit more easily, completely free. You could just download it. It's just meant to be a value add, but hopefully this was helpful. If there's any questions, feel free to comment down below, like, subscribe, share the message, and stay tuned for our next video.